Rule 9 of the money management algorithms is open equity average drawdown 2. It's the exact opposite of Rule 8. Rule 8 is buying weakness, while Rule 9 is buying strength. And so we want the average drawdown, the drawdown to be less than the average drawdown. So for example, take a look at this original strategy here. It's an open equity curve, so it looks at the bar by bar basis of the equity curve instead of a closed trade. And so say you're long in here and the market's going up, so your drawdown is flat, you're making equity peaks. Then you start to go into a drawdown, and so you see the black line represents the drawdown while the red line represents the average drawdown. And so what you want to do in this strategy when the drawdown is less than its average right here. The drawdown goes below its average, the black line crosses below the red, it gets back in. And so effectively what this does is Rule 9 is it buys strength on the way back up. And so on the way back up you're trying to catch these moves, while in Rule 8 you're catching it on the way down in anticipation that it'll turn up. And so Rule 9 catches it on the way back up. And so you can change the average time period to L1 that it looks back at the drawdown and measures that. So the goal is to get in on pieces of your original strategy as the drawdown decreases. You're getting in on a decreasing drawdown while Rule 8 gets on an increasing drawdown. And so one of the keys in this is you can combine this with another strategy. You can actually combine Rule 8 and Rule 9. They both use the same L1 by default, but if you change those L1, so for example, Rule 8 is a 20 period and Rule 9 is a 40 period, and so, or vice versa, then you can get signals from those two strategies combined. Whereas if you just use the same L1 period for both of those, you won't generate a signal. So you might want to look at the difference between a shorter term drawdown versus a longer term drawdown as to when you enter on an increasing drawdown or a decreasing drawdown, or compare it to the the closed equity, one of the closed equity rules. So if the trend is up on a closed equity rule, Rule 1, 2, or 3, then you use Rule 8 and buy in on a drawdown. So you're buying in on a bar by bar drawdown while the equity curve drawdown for a closed trade is still up. And so long-term strength, short-term weakness, similar to market analysis. And so the money management algorithms let you do this. You can combine multiple rules. Once again, I wouldn't use more than 2 or 3 rules at a time because you can get into curve fitting. Most of the time I use just 1 or 2. So that is Rule 9, average drawdown 2, while Rule 8 is average drawdown 1.